And Julien Brault, thank you so much for being on the spot.
My pleasure. Thanks for inviting me.
Yeah, I've been a fan of Hardbacon for a long time now, and I met you once at the conference, and we had a great chat. And you're a very interesting person because your path is very interesting to me. You are the CEO and the founder of Hardbacon.
Thanks.
Uh,
But yours is too. We should do a podcast about you next
Oh
time.
yeah? Oh, hopefully I will be interesting enough for that. But I wanted to ask you about Hardbacon in itself and about you in particular, and how did you decide to go into business and start something like Hardbacon? It's a cool startup. It has its own app, which is amazing, and it has, different web platforms. How did it all came to be, and when did it all start?
Yeah, I wish like I had this this idea 5 years ago, because like it evolved. But to be honest with you, it started as I wanted to kind of level the playing field in terms of investment. And now our Bacon is more a personal finance app than an investing app, for sure. But at the beginning, that was kind of the vision. Was I was a financial journalist, and I had access to a Bloomberg terminal. I mean, we were sharing one for the whole press room. That
Yeah,
tells
those
you.
super expensive right now.
Yeah. Like I think the last time I checked was like 20,000 US per year,
Oh my
but it's
God.
probably more expensive now. Yeah, for like, and you have access to so much things. Like you can have the phone number, and you can message directly with Bloomberg messaging,
Mhm.
or I don't know exactly how they call it, but it's you can talk directly to the analyst covering a stock, to
Wow.
the biggest shareholders that needed to file. I don't remember the number of the form that you need to file when you hold more than 10% of a public company. But you could find this information elsewhere, but so much time consuming, because sometimes you have to deal with PDF and really weird way to
Mhm.
search. So like I felt the retail investor was kind of fucked, and obviously the data confirms it. Is most retail investors are doing really poorly, even
Mhm.
if the professional are not doing so well. That's
Mhm.
why index investing is so popular. But like
Mhm.
retail investor picking stock is just a catastrophe. And I thought so many things with modern software can be automatized and calculated for you. And I was like, why the banks don't offer a platform that would give you an idea of your return on a position, by taking into account, the trading fees and the currency conversion, for, let's say, for a Canadian to invest in the US, and also, benchmark you to, like, okay, like you did a return, but actually, maybe you didn't beat the index on this position, for example. All of those is not very hard, technology to develop. We're not even talking about AI. It's just,
Mhm.
traditional software.
Right.
And so that was the first idea, is like, let's bring, and initially Hardbacon, I wanted to launch a brokerage, an online brokerage that would be made for this century, that would really help people do the right thing.
And what year
uh,
was that?
when I started to research this idea, was 2016. Like Hardbacon was founded in 2017, but I think, yeah, I don't know exactly when I switched the name, but at the beginning, Hardbacon, the first iteration was a landing page that had, like, that's the only thing a program.
Oh, just a
Was
website.
the initial landing page. I did it in HTML, was like 5 line of code, no CSS, just
Mhm.
HTML. So
Mhm.
that gives you an idea. I'm not such a technical person. My background is financial journalism.
Mhm.
And that was the first iteration. I just wanted to help the small investor make better investment and better decision. It didn't take me much time to realize that launching a brokerage didn't make any economic sense. And the proof is that nobody, even Wealthsimple, they bought the brokerage, and nobody launched new brokerage with new license,
Mhm.
since I did this research. So I was, hopefully, like in business, you do a lot of mistakes. It's unavoidable, but at least I didn't do this one to try to,
Okay.
get a license. And it's so hard to get a license in Canada compared to the US. And then the cost structure, it costs you a lot of money at the beginning. So yeah, for sure, it's like, for an existing brokerage to do another trade, cost them almost zero. That's true. But in order to be able, to be a brokerage and, offer those trades, you
You have
need
to
to spend
charge.
a lot of money upfront. So like I realized that even if I was great at fundraising, which I was not, even if I had, I estimated it would cost me about 20 million just to get, to the first trade.
Wow, that's crazy.
Yeah, it's too much money. And even then, we did financial projection. It doesn't look good. Like I wouldn't have invested my own money in this. So obviously, if it didn't make any economic sense to take a risk to get a lousy business that is not profitable, then so I abandoned the idea, and we ended up using screen scraping to kind of add a software layer to existing brokerage in Canada. That was the first version of Hardbacon. And then we realized that
what is a screen scraping, if you don't mind me asking?
Oh yeah. So for those that are familiar with open banking in Europe is basically banks allowing third party to use the data when the consumer decide to share it with a third party, and usually it's going to be done through an API. Not everybody knows what an API is, but basically it's a technology or a way to get structured data from one software to another. So basically a way for our software to connect to, let's say RBC software, and they give us information. Screen scraping it's not a software that talks to another software. It is in a way, but screen scraping is basically a little piece of software that acts as if it's a human. So it doesn't, talk in code. It actually click on buttons and screen scrape, which is like basically take pictures of the screen and then transform this, those pictures of the screen into data. So it's not as good and as fast and as precise as being directly integrated, but currently in Canada, that's the way that if you open a brokerage account like with Wealthsimple Trade and they ask you to connect a bank account, it's going to use screen scraping to do this kind of connection, because actually there's no infrastructure to have direct connection. So they announced, the federal government announced that they would implement some form of open banking in Canada in 2023. So hopefully, but that kind of got me started in like this space, and eventually, like today, we kind of realized that not only there was not much money to be made in this space of catering to self-directed investors, but also that the real personal finance problem of people was not really that, it is a problem that people cannot pick stock. But as we said at the beginning, most people should probably just, index invest and pick an ETF that track the market. So we realized that the biggest problem is, the lack of financial literacy. Like people are not budgeting. People, when they sign, like they get an insurance policy, a mortgage, they don't read the fine print. They don't even understand what to look for in the fine print. So even if they read the whole fine print, they wouldn't, make a better decision. So basically we kind of switch, from, helping self-directed investor make better investment decision. We decided to help all Canadians make better personal finance decision. And then Hardbacon went from, like, we still track investment, but you can also do your budget, build a simple financial plan in the app. And also we're going to recommend you financial product that best fits your need. And we also have a database of a bunch of financial product that people can just search and look for exactly what they should compare with. So that's
Great.
kind of
And so that means, like, at some point you pivoted to personal finance, and if you had to choose right now, and you have to like say like this is what Hardbacon is, does Hardbacon cater to like an everyday person who just needs to make sure that they are taking care of their personal finances, and that's where the core audience is?
Yeah, for sure. Right now, like we still have people that use it to track stock, but it's a minority of our users that use this feature. So like I would say that the top feature for Hardbacon is the budgeting side. Like everybody have, and the funny thing, people think it's only poor people.
Budgeting is my most favorite thing to do, to be honest.
But budgeting is an issue for every level. Like you have people that earn like 300,000 a year, and they spend too much, and they have issue with budgeting. And so I feel budgeting, the poorest person need budgeting, and the richest person need budgeting. So it's really kind of a common denominator, and it's the start of everything. Like if you want to, you have a financial goal and you want to make a plan, usually this plan will, say like save X amount of money per month, or buy, this thing that's going to cost you money. So before you can do anything, you need to budget. And that's the name of a popular competitor, you need a budget. But we do a little more. So our differentiator is that it's just not a budget app. It's really an app to take control of your finance.
So I just want to ask you really quickly. At some point, you did create this app, and that seems like a step up from just having like a platform as a website and have everything on that platform, on the web platform. How difficult was it to kind of to like assume this decision to create an app? And as a non-technical person myself, I'm always kind of get startled, like, how do I create an app? Like, I have to create a team and I have to talk to them, and like, what do I talk to them? Was that difficult for you to switch to like to assume like another platform, like an app platform?
Oh
How did
yeah.
that come about?
It was so hard because it depends. If you have a lot of money, you can hire, a great team, and but I didn't have a cent. So the first theory was like, I'll just bring people that are going to do it for equity, and it can work. Like, I've read a lot of funding stories, but I feel in Canada we're more risk averse than anywhere else in the world. I mean, maybe Swiss people are more risk averse. I don't know Swiss people, but like they're very risk averse, especially if you compare to the US environment. But then like, and I had multiple, not like one guy, like multiple people that tried to do this. And basically it was always like, they wanted to give like 4 hours per week, or way less than it would make sense to get to at least, a prototype that you can show and it is working. And the level of commitment, and also like it's like, okay, you can start by keeping your job. I understand, like, you need to eat, which is a basic need, but like most of them, when I had the conversation, it's like, what does it take you to leave your job? Because that's the only way you can, even to raise money. Usually investors, they don't want to hire employees. They're in business of investment, so they want people that took a risk. So in order, like, I was willing to share a lot of the equity,
Yeah,
but
skin in the game.
but yeah, like those people, they were like, their condition ended up being like, yeah, if I get exactly the same salary that I earn now from your VC investment, but the VC will not come if there's no partner. So I never managed to I could talk for the whole podcast about all those stories. But basically, I managed at some point to get into an accelerator in the US called Queen City FinTech in Charlotte, North Carolina, which is actually kind of a banking capital of the US, because Bank of America is headquartered there, and Barclays and BBT, and like TD US is in South Carolina, but like 20 kilometers from
Right.
Charlotte, or 40 maybe. So there's a lot of, like, everybody works in banking. You go to a bar, and it's probably a banker. Like, everybody that has a suit is a banker for sure in Charlotte. So and I had a $20,000 US check.
So you had to go there, and that combinator, you had to pitch your idea, and they give you like a grant, basically, right? Or
Yeah,
was
it
it
was.
like
They take a percentage. A lot of accelerator
oh, I
works
see.
like that. They took, I think at the time it was 7%.
That's a
Obviously
lot.
they were diluted a little bit, but yeah, it was a lot. But also I had nothing.
Yeah.
That's the thing. It's like,
That's
if you
actually
invest
pretty
in
cool,
much,
right? Out of nothing, you created 20K.
yeah, like, it's expensive for sure. Like, I'm not gonna say your equity is nothing, but as you start, if you get a big help, and this $20,000, and also this accelerator, it was really like on site. Every day they had mentor that built multi-billion dollar, maybe a couple. Usually it was more multi-hundred millions. To be honest, the mentors we had, but still,
Wow.
it's quite impressive. That in fintech. So that's another thing about mentorship, and I got into many programs of the sorts, to kind of get advice. And one thing I learned is that industry specific advice, very useful. General advice from someone that was successful in an entirely different business can be useful. There are, HR issue, but especially at the beginning, it's like regulatory, and especially in fintech, it's linked to fundraising, and it's linked to technology,
So it's
and
like a
all of
technical
those.
advice rather than like a strategy, right? I feel like
Yeah, at
at
the
the beginning.
beginning, I feel you need industry specific advice. There's so much better because everything is so different. So this was really helpful, and I actually used the money to hire kind of guys, and I give them some equity too, but they had at least a salary, and they were less senior. Like, they didn't have a big piece of the pie. They had a very small percentage, but I managed to hire those guys. And I had also, I had the co-founder that, stick finally, and he was doing it part-time. But that's how this got
What?
off the ground in terms
Tell
of
me about the
technology.
And tell me about the co-founder. What's their specification in terms of like the skill and like what's the contribution of the co-founder?
Yeah, like technically, ideally, like it should be two guys or two women or whatever, one woman, one guy. Doesn't matter. Like two persons that start a business together, 50-50. They know each other already. They work well together, and they have complementary skills. And also, the most important, they have the same level of engagement toward the new venture. That's the ideal. That's not my case, but that's if you have that, like your sense of success just by having two co-founders that are all in the project. They're willing to do sacrifice and eat ramen to do it. You're already in the top pack, and most startup actually don't fail because of co-founder dispute. So there's a downside of having co-founders, but let's say that you two people, each other for years, you work very well together, complementary skills, and both like you're already, it's crazy because this requires no money, but if you find that in your life, know
Priceless.
that you're probably in the top 1% of entrepreneurial journey, just by having it's such a, and if it's three people, the issue here, and that's why I said like you know each other for a long time and you work well together, is because the more people you are, let's say you're five people, that would be great if everybody is engaged and complementary and so on, but likelihood of a fight is very high, and you need to structure yourself to be able to manage. I've seen so many startups just fail because there's a fight and they didn't have documents. So it's like, are you going to start a business where one guy is probably going to sue you and to take half the business that don't even exist? So I've seen countless of projects that started with multiple people and then didn't have paperwork. One guy left and they were like, we're not going to continue that. This guy's going to sue us even if we're succeeding. Like it's not a good place to start. Like it's already hard to make something happen in the world that don't exist. But then you have zero value, but there's already some guy who wants to sue you. But obviously, he's not going to sue you when you work zero. But if the guy is like, oh, I'm mad, and you should. I should have 20% of the pie and do nothing. So usually what happens is just people just take the next call and forget the project. But yeah, having co-founders I think is a big help. In my case, it was kind of asymmetric in the sense that my co-founder ended up never joining the company full time. We had an agreement that allowed us to manage this process, and it still hold a small percentage of the company. But yeah, like that's how it got started. It's hard to start, especially when you have zero money.
Wow, that's such a fascinating idea. Like lately, just the idea of entrepreneurship, especially in the current market conditions, how does this happen? Obviously, this whole popular kind of think about being an entrepreneur, being a startup founder. This has been ever since like the Social Network movie came out. Everyone's just like all about it, and VCs are happy to like invest a lot of money. But at the same time, in these market conditions, I feel like VCs are going to be more kind of like more decisive, more picky about like what they want to invest in. It's going to be harder and harder for young entrepreneurs with let's say very little connections to raise capital and to make sure like to make their ideas
It's
real.
interesting you mentioned that, because what happened is it's never been so cheap and so easy to bring a technology product to market. Not because capital is easy to raise, it's just because there's so much. I'm not even talking about no code tool, but that's another option for non-technical co-founders. But even there's so much framework. It's much less long and it's much faster to develop basically anything. There's an API that can do anything. If you think, oh, I want this feature, probably you can implement it by with building blocks. The flip side is that VCs are not, they know that, so they're waiting to, they're never going to invest. Like we're not in 95 where they're going to invest in like, oh, I need $1 million to develop a product. They only invest in companies that already have a product and a structure. So even if you were just talking about like an angel round or something, you need something. So you need to kind of cross that path, which is very hard, especially if you're a non-technical co-founder and you have no money.
You have to prove yourself
That's pretty
basically.
tough. But yes, so funding obviously, and now that the market is less good. Even before when the market was great, you still needed the product and some level of traction. Now, traction is more and more important, and there's less and less, oh, I'm investing in the team. The exception is and it's kind of stupid for new entrepreneurs, like, oh, if you had already a big exit, probably, it's easy to raise money. But unless you provided the big exit to outside investors in the past, fundraising is extremely hard.
Wow. So since we're talking about fundraising, I'm going to jump in right to the question that I had prepared is your fundraising campaign with Frontfunder, which was a very interesting campaign. I've never seen anything like that before, but I've got to experience it and it was pretty cool. I just wanted to ask you to share a little bit backstory about you guys deciding to raise with Frontfunder and for uninitiated, this is a kind of like a crowdfunding platform where any private person can actually in Canada invest in a company. Can you talk to me a little bit about how did you come to this decision? And I saw that it became very popular too.
Yeah, no, it's growing, especially since the pandemic. I think it's kind of there was some crazy stuff happening, and we're not going to talk about this, but a lot of people started to invest in crypto, started to invest in the stock market. A lot of younger investor that probably didn't follow any rules, but still they got, they learn about it for sure. Even if it's like they learn what not to do, they for sure learn. And I think equity crowdfunding really, like everywhere, got a big boost from that. It's becoming more and more a legitimate way to raise money for a company. So just since your audience is, you mentioned, is maybe not familiar with equity crowdfunding, just like to define it, because everybody knows about Kickstarter. Kickstarter being a platform where you have a project, you can be an entrepreneur, but basically you're doing pre-sales, or you just promise thank you note in exchange of contribution. So people putting money in Kickstarter to fund a project, they're going to help the funding, but they don't get into any equity, they don't get shares, they don't get, it cannot be a loan, they cannot, the project cannot say we're going to refund you with interest and so on. So equity crowdfunding platform like Frontfunder in Canada, what they're allowed to do, and they're regulated, so they need a bunch of license to do that. We can basically issue securities through those people, so those people can become investors or debt holders depending on the offering, and that makes it interesting for retail investor that usually didn't have access to private startup. Usually, to invest in a round of a startup, usually you needed to be an accredited investor, which means you need, I think, like more than 2 years of 350,000 of revenue annual, or more than 1 million in liquid assets, means your house isn't included in the calculus. So like people with actual real money. And usually, even if you are one of those people, usually the ticket to invest in a tech company usually is going to be 50,000 minimum. Like I've seen, 20,000, I've heard of 10,000, but that's very strange. So usually it's big amounts to participate. So even if some people, they earn this money, they don't have so much cash to just drop 50,000. So there was a really high barrier to entry. With equity crowdfunding, anyone can invest. And we decided to go this route because of the nature of our business. Like initially, like I told you, the first users of Hardbacon were self-directed investors. And we were already producing content about investment and so on. So we thought like a lot of people know about Hardbacon, and probably they would be interested in investing. And actually, before we did our first equity crowdfunding raise, I had a bunch of emails of people that were like, oh, and they didn't know anything about investing. They just, I was sharing about my journey on LinkedIn and, on the newsletter, and they would write to me, it's like, oh, how much do you need? Like, maybe I can help. And oftentimes those people were not accredited. And when I asked, like, how much could you invest? It was like really small amounts. So I was like, okay, like, I don't think it's worth, getting a lawyer involved. And, the cost of lawyer is going to be more if they just want to put like $1,000 or something. So that was the idea, because it's still tough. Like, what I wouldn't want your audience to think, especially if they're looking for funding, is that you just need to do a cute video and put it on those platforms, and then suddenly the money appears. Like, it's you need to, a little bit like a Kickstarter campaign, for those that are familiar to those kind of campaign, you need to bring the people to the party, and you need to convert them. The platform is just a way to make it easier in terms of legal compliance, because you're dealing with so many people, and it's a way to kind of convert and automatize this process to have a large number of shareholder, but it's not really a marketing channel.
Were you expecting to have raised so much over your goal originally? I think you had a goal and then it kind of overshoot by 30% or so. Were you expecting so much popularity from the campaign? Was that something that kind of like gave you that boost, like, all right, we're really into something here. Like people are really, really like believe in this project.
So I mean, you're referring to your last round. Actually, like since starting Hardbacon, we raised about 3.1 million from equity crowdfunding. So that
Wow.
was technically our
Interesting.
fourth round.
So you were
Um,
like, okay, like I knew it. This is popular. It was basically like just kind of like an everyday situation, and
I mean, there's a lot of work behind it, but yeah, like when you do something, more than once, you get better at it. So the key thing was to, find an investor. There's no magic trick. It's like we did, online marketing to have people that were interested in the round, and we surveyed them, and then we knew who to call to get the investment before it started. So it's a lot of work, before the campaign. All the work is before the campaign, not during. And that's another sad thing. A lot of people reach out to me since, we're probably the company that raised the most using this specific method.
Mhm,
And they call me when it's not working at middle of the campaign.
mhm.
And my trick is to do all the work 6 months before the round starts, so that I can, like, I sometimes people approach me before launching one, so then my advice is useful. But during the campaign, it's like, okay, like you can still find investors, but you have 30 days, and
Right.
if your average investment is like 1,500 and you're looking to raise 1 million, then it's going to be hard to convince all of those people and close all of them if you have 30 days.
Nice. I see. That's fascinating. I just wanted to come back to the app itself.
Yeah.
I just wanted to underline that Hardbacon has this app and a variety of portfolio of websites that it's owned. But like an app in particular is really attractive to me just because it's so well designed and it's
Oh, thanks.
somehow, like, in my opinion, it's just like, for me, it's just such a great user experience. And I cannot really put my finger on it why exactly, but I feel like this app is very easy to navigate, and it's very non-invasive. Like, and it
Oh,
asks
thanks.
you what you want to do, and it asks you about your profile, and the design is very cute. The little piggy bank, and then it's just like from the position of the design, it's just the color palette. So I just wanted to give a shout out to your devs and to your designers as well. Um,
But yeah,
I'm
there's a lot of work that like I feel it can be better, because it all, and especially with finance, because there is the UI, and you can find a designer that do nice UIs. That's not so hard. But the problem is people need to understand, and people have very low literacy rate. And every time we think, oh, that everyone knows. Basically, people know nothing. Like in terms of product, I'm not saying, oh, I'm better than everybody. Like there's a lot of stuff I don't know. But like if you build a product for personal finance that is B2C, that is not made for expert or people that study finance, you need to assume that people know nothing. And that's kind of hard, because there are people that know stuff, and you cannot say like, oh, listen to this video for 5 minutes and then we'll let you go further. So it is the hardest. So it is a good challenge for UI designer or
Yeah,
product manager,
and
but
in
I
terms
would say it's the hardest.
Yeah, and in terms of education, yeah, I think also I just wanted to give a shout out to your copywriters, to your writers, to your content writers, because they're all producing very great articles. I know it firsthand. I read them. I love the articles on crypto as well. So Hardbacon not only like uses, kind of like provides this tool for budgeting, but it also provides education and articles that are really valuable, that have like information that is timely.
Yeah,
Uh,
thank you so much. I mean, that's our basically that's the core of our marketing strategy. Like we realized, and we tried many things, like in terms of customer acquisition, we did, a universal downloads campaign on Google and on Facebook. I don't know how they call it, but we did them as well on Apple search. And basically, we found a lot of people were not sticking to the app. So a certain number, would download it and then become a user. But a lot of time, people are just checking apps. You don't know what they search on the, maybe they were looking for something very specific or app, came up, and it was not the right one. So we found that the best way to acquire people was to basically answer a question that they were asking. Usually they don't turn to the App Store, they turn to Google, and they're like, what's the difference between, a fixed mortgage rate and then the open mortgage rate? And it's just an example. And then they come to our website because we have really good SEO. And
Right.
then, they learn what they need. And then we're like, hey, by the way, if you want to take control of your finance or save for your house, or and so we put our app at a different place on the website, but the entry door is usually the content, and then we kind of show them tools that they didn't even know they needed, because that's the problem. When you don't have the knowledge, you don't know what you don't know.
Exactly. Julien, we only have 6 minutes left, and I only have
Yeah,
2 questions for you left. I'm new to Canada. I still consider myself new, even though it's going to be 3 years since I came, but like 2 of those years were in pandemic, so I was indoors.
fuck.
So for me, it's also like it's such a fascinating idea. You guys are based in Quebec. I'm here in Toronto, and the country itself is it has kind of like two cultures. I mean, it has a lot of cultures, but like it has francophones and anglophones. And your company in your app is something like new to me, that it caters to two language speakers, like French speakers and English speakers. Um, just from your point of view, is it hard to navigate? Is a matter of like, just let's just translate this to French and this to English, or there's also like this different target audience, like in Quebec versus in Ontario versus like in Alberta?
I mean, in terms of product, like there are cultural differences, especially in content, and also the different regulation in Quebec as well. But in terms of product, I would say, yeah, like we just localize, and localizing is a little bit different than translating, because at the end of the day, what we want to make sure is people understand, how to, budget and make a financial plan, and understand why, that's what the app presents to them. So yeah, it does add a layer of complexity to my like I that's why most fintech, they start in Toronto, and they end up being really, really big before coming to Quebec, just because it is complex, to manage two language all the time, because every time you update, and that's a startup, you keep evolving the product, every time you add another task, which is localizing. But like I don't have really we did it since the start, because we started from Quebec. Like my original audience, I used to be a French, I was writing in French for Les Affaires, which is a French language newspaper here in Quebec. So a lot of my audience was French speaking. All the potential clients, and partners were in Toronto, so we couldn't do a French thing, and we couldn't do an English only thing. If not, like our audience would have kind of been mad. So we did it since the start. But to be honest, I didn't even know how come. Like I thought it's just like, okay, we can translate a couple things.
Yeah.
But yeah.
Julian, do you expect, and that's my last question, just really quickly, do you expect an influx of users due to the recession right now that is looming over our economy and the world economy? That's like yes or no,
Like,
do you think?
do I expect a recession?
Do you think there's going to be more users using Hardbacon to budget, because a lot of people will lose their jobs, they need to like think about their finances more?
Oh, okay, I like it better. So for sure, every time rates change, like instability, economic instability drive usage, and basically it's not because of Hardbacon. Is economic instability lead people to question their personal finance, question their mortgage, question do I have enough money to survive if I lose my job, even if they don't lose the job. So even like we had a big wave of growth in 2020, and actually it turns out that there was a very quick recession in terms of the market, and then it was like there was too much money everywhere, but
All
still
right.
there was enough uncertainty, and that a lot of people got dragged to understand. And you see it, like it's not just Hardbacon, there's more money influencer than there ever was before. So I hope there's not going to be a big recession. But in any case, as long as it moves, even if it's like waves of like going up, going down, if it moves, it's going to help Hardbacon. So I hope it's just a little bit of recession and mostly
Yeah.
growth.
Well, either way, Hardbacon is going to be there to help people to better plan their finances. Julien Brault, thank you so much for being on this podcast. It was an amazing conversation. I did not expect it to be so behind the scenes, kind of like let's talk about venture capital and startups, but it is a fascinating topic as well. And I really appreciate you giving us a little bit of details on like what's happening behind the scenes for entrepreneurs who are doing it for the first time.
Thanks, Amir.
So how can people find you? Can they connect with you on LinkedIn? Can they follow you on LinkedIn?
Yeah, for sure. Like my name is Julien Brault. It's spelled Brault. So on LinkedIn, my email is julien@hardbacon.com. So it's quite easy to find. And if they want to, improve their personal finance, they can go to hardbacon.ca or download Hardbacon in the App Store or Google Play.
Fantastic. Thank you so much, Julian. I appreciate it.
Thanks.